Welcome back. You are tuning in to Trader Station. It's my pleasure to have Sean Brodrick back with us here today. He's a natural resource analyst, money and markets. Of course, Sean, welcome to Trader Station. How are you today?
Hi, it's good to talk to you again.
Good. Sean, listen, oil jumps to near record on the week's supply. What's with the news coming out on this?
Well, I mean, sure that, sent things higher was the worst of all possible worlds for people who want oil prices to go lower.
Yeah.
Because we had a drop in, oil inventories. We had a drop in gasoline inventories. We had a drop in the run rates at the refineries. So you put those things together and prices will go higher. That said, prices are down now because the U.S. dollar is up a bit. See, because people are using oil as a hedge against a falling dollar. So those two are really moving opposite now. So if the U.S. dollar rallies, oil prices will go down.
Well, wouldn't that be sweet? So we would kind of kill two birds with one stone, but, take care of some of the dollar problems and get rid of the oil problems.
That said, I mean, the U.S. dollar has reasons for being down in the gutter. It's really in bad shape.
Yeah.
I mean, at some point you will hit fundamental values. In fact, I was just talking to an analyst yesterday, and he's a pretty smart cookie. He thinks the euro is overvalued by about 20% compared to the U.S. dollar. Now, that kind of drop would be amazing.
Yeah.
But considering the trends that are in place, the U.S. dollar will probably continue to trend lower. That doesn't mean it goes lower every day, but trend lower, because over in Europe they aren't cutting interest rates, whereas we are cutting them here. And that basic fact is just one of the many reasons that could drive the U.S. dollar lower down term.
Yeah. All right. Well, I think what we need to do is we need to stop diluting the dollar and maybe do a reverse split on it. What are your thoughts on that, Sean?
A reverse split. Well, would that send people jumping out of windows?
What do you think? 100 to 1, 1,000 to 1? What do you think? I mean, let's face it. They did it with the peso. Why can't we do it with the U.S. dollar?
Well, we do kind of have the North American peso now, but on oil, one thing that I would also like to point out is that OPEC is now pumping less oil. You have heard OPEC say that they think the oil market is plenty supplied. They don't have to pump anymore.
Yeah.
But the fact is they're also pumping less. I mean, last month they cut their production by 85,000 barrels compared to the month before. That's not a lot, but you have to remember that the prices are made on the margins here.
Right.
And so they're happy to keep these prices higher.
Right.
They'd be happy to sell you oil at $120 per barrel, and they might get that chance.
You're absolutely right. Not only is the production of oil down, but also the refineries. I mean, look at the refinery levels are currently at 83.1% of capacity, and they should be running around 80, 90, 90%, right?
Yeah, well, the folks there do a heroic job, but let's just remember how old those refineries are. And yes, they replace bits of them here and there, so you can't tell where the old refinery ends and the new one begins.
Yeah.
But, I mean, they are held together with, some old gum and some baling wire, and they are going to have problems. They have to have more and more maintenance because of how old they are.
All right, let's start. Why aren't we building? I mean, we might be building more refineries, but that seems to be the crutch of the whole process, and it has been for quite some time. Let me ask you, are we building new refineries?
There is one going to be built, and in fact, I think Saudi Arabia is also building some. They say, why not just ship these folks finished products? We'll make more money that way. There is that, but you have to understand, I mean, unless there's a real economic incentive, you're taking on a huge risk building a refinery. What if they build the refinery? That extra production drives prices down, and so any plans they made to make money from the refineries kind of go out the window. So in the kind of system we have now, where those are private enterprises, it's in their best interest to pump as little as possible, to produce as little as possible, and to sell it at a higher price.
I agree. All right, Sean Brodrick, folks, where can we find you at, Sean?
Well, you can find me at moneyandmarkets.com, and you can also check out my blog, because I have interesting stuff on the U.S. dollar there.
Yeah.
That's at redhotresources.blogspot.com.
All right, head on over there, folks. And, Sean, please, let's spread the word on this. We need to do a reverse split on the dollar, okay? We need to do it. Help me spread the word. Sean Brodrick, folks. Thanks, Sean. Up next,
thanks.
More calls, my stocks. Stay tuned.